time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Okay, so we're going to talk about Micron. We received a question from a listener, and the question was, what did our listener have to say? Greg from Delta said, what's going on with Micron? It's a growing technology company and trades at 6 times earnings. Is this a value opportunity? So that's what we're going to explore today. And Micron's a company I've been keeping an eye on because one of the reasons is because it's in the chip space. I like to know what's going on in the chip space. I find that an interesting area, but also because, yes, the fundamentals have looked very strong recently. So let's get into this. Micron Technology, it trades under the symbol MU on the NASDAQ, trading about $53 per share right now. It's a near $60 billion market cap company. And what they do is they design, manufacture, and sell memory and storage products globally. So they're a computer chip manufacturer. They're particularly strong in the storage and memory segments. And some of the end markets that they service are PC, mobile, data center, industrial, and automotive. So the question posed was specifically about Micron's growth and current valuation. Well, the company recently issued its Q4 results for the fiscal year 2022 on September 29th. And the full year performance was pretty good across the board. Revenue was up about 11%, margins increased, operating income up 35%, and earnings per share up 26% to $8.35. So good, strong performance across the board. If we look at the earnings for the year, $8.35, compare that to the $53 share price, we're looking at a price to earnings valuation of about 6.4 times. So what gives? The company grew its earnings by 26% over the last year, and it trades at 6 times earnings. So the problem right now that we need to take a look at here is that it really actually doesn't trade at 6 times earnings. It trades, in fact, at closer to 170 times earnings right now. So the company's annual performance was very strong, but it ended the year with a weak Q4. Fourth quarter revenue was down 20%, margins declined, operating income was down 46%, and earnings per share were down about 40%. So although the company had a very strong year, they ended it on a weak note. And there's a couple comments from the conference call here that I decided to highlight to give you an idea of what happened during the quarter. One of these memory and storage, the memory and storage industry environment has deteriorated sharply since our last earnings call. So this is the CEO. Our fiscal Q4 financial results were impacted by rapidly weakening customer demand and significant customer inventory adjustments across all end markets. And they mentioned a few things. They mentioned inflation. They mentioned the Ukraine war, a couple other factors as well. But for Q1 2023, so the next quarter, they put out guidance of earnings per share of 4 cents to 10 cents for the quarter. And that's going to be compared alongside $2.15 from the quarter in the year before. So as we can see, the outlook, at least in the near term, not looking great. I pulled up the analyst estimates. Analysts are estimating about 23 cents per share in earnings for the current fiscal year, then a recovery to $3.91 next year, but the current fiscal year about 29 cents. And this would make sense if you're going off of the company's Q1 guidance and you're assuming that things don't materially strengthen through the course of 2023. That's right around where they would be. So $53 share price, 29 cents in earnings, you're getting up over 150 times, 170 times on a price to earnings multiple. So certainly not quite what it appears, unfortunately. And I would not call Micron a value opportunity. What's really important to understand about Micron is that it's, in fact, a very cyclical company. If you look at the historical revenue and earnings profile, there's big swings, fairly sizable cyclical swings in the growth, going from positive to negative, higher revenue to lower revenue. In some periods, lack of profitability, although typically profitable. So it's really not a value play. It's a cyclical play. And you're looking at a year in front of us where earnings are going to decline fairly significantly. But when we look out over the midterm, there are a lot of long-term growth drivers that I find interesting about Micron and some other companies in the chip space. So just in terms of what's driving demand long-term, artificial intelligence, cloud, electric vehicles, 5G. So essentially technological innovation is driving the demand for chips. There's also a trend of reshoring semiconductor manufacturing capacity. So Micron has announced their intent to invest $40 billion through the end of the decade into leading edge memory manufacturing in the US. And this is contingent on some legislation passed federally in the United States. On the 4th of October, the company also announced a historic investment of up to $100 billion to build a mega fab facility in central New York. So a lot going on in the future. It's really the near term that is very uncertain for the company. Now, another statement that they made in their conference call, they said following a weak first half of fiscal 2023, so that's the next 2 quarters, we expect strong revenue growth in the second half of fiscal 2023 as demand rebounds following substantial improvement in customer inventories. So they're thinking that things are going to start to recover about halfway through the year. But if you look through the conference call, they're admitting there's just a lot of uncertainty. And the fact of the matter is they don't know when things are going to start to recover. If we're just talking about an inventory issue, then things should probably start to recover mid next year, as long as the economy remains strong. But if we're talking about a decline in consumer demand, underlying demand, then it could potentially take much longer than that. Just a quick look at the company's 5-year stock chart price. The price is down 45% year to date in 2022. And you can see over the 5 years, it's really not up that much. Very volatile stock. And this reflects, as I said, the underlying cyclical nature of the company's financial performance. So what is our take on Micron? Well, we see significant near-term uncertainty, and the weak management outlook for at least the next 2 quarters and potentially longer is a major concern. Long-term, the demand drivers do look strong, driven by technology innovation and the reshoring of chip manufacturing in North America. What we would say right now is that it is a potential long-term buying opportunity, but there's absolutely no hurry to fill up a sizable position in this company. You really have to look at the company with a time horizon of at least 3 to 5 years. It's very uncertain what's going to happen over the next 1 year to even 2 years. There could be further downside in the price. So for those investors that are interested in taking a position, they're looking at this long term, they want to get in now, I would say start at a very small position size, take a look at what happens over the next quarter or two, and then make a decision then whether or not you want to increase your position.